Hello and welcome to Unleashed, the show that explores how to thrive as an independent professional. I'm your host, Will Bachman, and I'm here today with Jeffrey Fidelman, who is the founder of Fidelman and Company. Jeffrey, welcome to the show.
Hi, Will. Thank you so much for having me.
So, Jeffrey, you were telling me the story the other day of how you started out yourself as an independent consultant and then you needed some help. You engaged a few contractors, and that led on to something. You engaged some more, and now you have a firm with what, about 15, 20 employees?
Yeah, so we just turned the corner, 32
Oh,
consultants.
32. Holy smokes.
Yeah. 32 consultants, but certainly, started very slow and almost had a snowball effect as we rolled into not only 2020, but the coronavirus pandemic and through that now.
Congratulations. That is amazing growth. Not many people reach that level of growing a firm. Tell me a little bit about the focus of your firm. What kind of clients do you serve?
Sure. So what I really label our firm as is a management consulting firm with a focus on strategy and operations. Typically, we're working with companies that I would say are late stage startups or lower middle market companies, businesses that have a product, have a service, and are in the market executing on that product or service. So they are generating revenue. They may or may not be profitable, um, but again, have a product, have a service, and are currently in the market, have gotten over that execution risk.
And
In terms of
Yeah, and what does lower middle market mean in your world? Like, what size of a company is that in terms of revenue or profits or number of employees? Uh, just help me understand that term.
So lower middle market, I would define as at or under $100 million dollars in revenue. And it's interesting to be asked the question, what does that look like in terms of size, in terms of number of employees? Because I've had the opportunity to work with companies that had 10 employees generating 20, $30 million dollars of revenue. And on the other side, working with companies that had 100 employees only doing about 7 or $10 million dollars in revenue. So it's tough to answer the question in terms of number of employees or size in that manner, but certainly from a revenue perspective, there are certain trigger points and certain changes that you need to implement in your operational process, not only in order to grow to that size, but then after that size as well.
And are you mostly working with sort of funded startups, or will you serve the local, garden center that's been around for 30 years and has 25 million in revenue? Yeah, that's the question.
Uh, so yes is the answer. And to break that down, we have worked with family-owned businesses that are in their third generation, continuing to grow to thrive. One of our clients right now is a 100-year-old insurance agency,
Wow.
repositioning themselves, continuing to grow their legacy business, but also implementing kind of this layer of tech-enabled tools for all of their agents internally. And on the flip side, yes, also we have worked with and continue to work with companies that are only a year or two old, have just developed that product or service, have put it out into the market, have found early success, and are now thinking about how do we standardize our operations? How do we standardize our success? And really, that's kind of where we come in and where we are able to help a lot of these businesses.
All right, cool. So you gave me a sense of your clients. Talk to me a bit about the range of the services you provide.
So from services, I would break down strategy and operations into the following ways. So on the strategy side, first is outbound growth. So when I say outbound growth, we're able to work with a business, with their key stakeholders to understand who is their target audience, who is their target demographic, who is their target geographic region. And what our head of growth is able to do is go into that business and develop a bespoke outbound marketing engine that that has campaigns, that has sequencing, that has essentially all of the operations built into it that's needed to run. We're then able to fill the top of the funnel with lead gen through a variety of subscription sources that our head of growth has. and continue to generate, at the very least, leads for that company. Also on the strategy side, most often we're helped to work with companies on their fundraise efforts. So when I say fundraise efforts, it's mostly helping them with the assembly of the collateral for that fundraise, for that capital raise. Presentations, financial models, valuation analysis, market research, and everything else that fills the gap. The only thing we don't do on that front is actually raise the capital. We're not brokers or third-party marketers, and I try to make that very clear to clients that are looking for those type of services, that we don't solicit investors on their behalf. Now, oftentimes, because of the work we do with them, they ask us to stay on as active advisors or interim COOs to help them go through the transaction process. So help them with answering diligence questions, managing the data room, term sheet negotiation along with those investors. And that kind of parlays me into the operating side or operational services that we provide, which are really helping a company streamline and ensure business continuity. So helping either revise or create operating manuals, policies and procedures, underwriting manuals, things or documentation that will ensure for both the stakeholders and any investors that are in the business that this is a business that has generated X in revenue. Once they grow to 20 or 50 or 100 or $10 billion, they have a set of policies and processes. They have an understanding of what is working, and they're trying to replicate what's working.
That's very cool. So I, as a consultant myself, have worked with clients and helped them on standard operating procedures for some specific thing, like how to start up this piece of equipment or maintenance on this piece of equipment. I've never actually helped a client on this business continuity aspect of policies and procedures kind of across the whole gamut. I don't even know if I've sort of seen that sort of documentation in whole at a client. Tell me a little bit about what that looks like, and give me a more granular sense of the types of processes that you're documenting, what the deliverable looks like, how it's maintained. Just tell me a little bit about that world.
So when I talk about policies and procedures or an operating manual, I don't mean a 200 or 300 page document. What I'm talking about is more on a management operations perspective. So every company has a product or a service that they sell. And every company typically goes through some sort of process or some sort of procedure after making that sale to the execution and delivery of that product or service. So whether you're a consultant, a widget manufacturer, or a banker, once you make that sale, there's a certain internal process that begins to occur. So you have your salespeople, your marketing people, your marketing engine, or however you're generating business. You've generated the lead, you've generated the business, you've made the sale. Now what? And now what is where we step in. So you've made the sale is now on the books, and now you need to deliver on that purchase. You've collected money, and now you need to deliver your product or your service. So what happens after making that sale? And how is that process, first of all, is it streamlined and is it efficient? And if not, where are the frictional costs that can be removed? Who is responsible for taking that executed transaction, from taking that sale and moving it all the way through this funnel until there is a delivery of that product or that service? So again, going back to widgets, it could be a surfboard, it could be a toy that I go online, I buy a product. Now, what needs to happen in order for me to receive that product? Oftentimes with larger kind of mass manufacturing or mass production companies, a lot of these things are automated and there's very little human interaction. But the more you get into these later stage startups, lower middle market companies, or even service-based types of businesses or financial-based types of businesses, there's very little automation that intrinsically is involved in the operations there.
Okay.
So really just streamlining. Again, I'm talking about a 10, maybe 20 page document. The sale was made. Now, who's responsible for servicing that sale? Is it operations? Is it underwriting? Is it originations? Is it an admin person? And then from there, what needs to happen in order for that sale to be effectuated, for that good or service to be delivered?
Okay. So I guess that helps me understand it. At Umbrex, for example, we do have several, we have policies like that, but they're embedded in Trello effectively. So we have a process for when we sign a new project with a new client. We have a process in Trello for if we're onboarding a new consultant as a subcontractor for the first time, all the steps we go through to get their W-9 and to do the contract and to get their billing info and so forth. Same thing, onboarding with a new client, making sure that we've done their vendor setup form and so forth. So for us, that's kind of just embedded in the system as as a Trello kind of workflow.
So
How?
it's exactly what you're talking about. And now imagine if, not if, let's say when, the company goes from 1 million in sales to 10 to 100 million in sales. You already have that process established, but is it documented somewhere? Is it something that as you grow, you may need to bring on more people, and more people that come on? Is there a very specific process that all of them are following? Or if you have 10 people in operations, are all 10 of them following a different process or a similar process, but in a different way? And the
Interesting.
idea is to make sure that as a company grows, and frankly, to enable it to grow systematically or scalably, let's say, these policies, these processes, what you already have implemented should be documented somewhere, just so they're in black and white in front of you and the person who's actually executing on that. Just so there's the idea of setting expectations both ways, between management and employees, between stakeholders and management, and all around.
Yeah. So for companies in this, say, 10 million to 100 million revenue size, how do you typically see those sorts of policies documented? In what format? Is it a Word document? Is it a Google document? Is it some sort of, other sort of instance and an Evernote note? I mean, physically, how is it maintained such that it can be, updated and that everyone can access the most up-to-date current version? There's version control. Tell me a little bit just how that process of managing policy documentation works.
Sure. So I guess going into a lot of companies now, I've seen a bevy of documentation ranging from, a Word doc outline or Google Doc outline through an Excel workbook. I've seen PowerPoint presentations that go through all of these things. And I think most importantly, it's in a form that's easily shared amongst you and anyone else that has a role or responsibility that's mentioned in this operating manual or policies and procedure documentation. And what's important to note is that no matter what, and no matter how much you grow or how efficiently you grow, whether it's the same growth or different growth, whether you've pivoted or not, this is a living, breathing document. So no matter what's put together day one, the idea is, of course, foundationally speaking, things have grown and you have grown along with this document, but there are always going to have to be minor changes and adjustments needed to continue that growth. And the most successful companies that we've seen implementing have collected data points on executing specific standard operating procedure. And then 30, 45, 180 days later, make adjustments based on the analysis when they look back over that time. So to give you an example, and we often look to our own firm as we grow to kind of consult on ourselves, but to use even us as an example, we also implemented and have frankly always been implementing a standard operating procedure in how we generate sales and market ourselves and close clients and bring in those types of clients. And we share the same standard operating procedure amongst all of our principals. Fast forward 30 or 45 days later, we're able to now look back to look at conversion rates, to look at conversations, to look at hard data points outside of using our own guts or emotional intelligence to weigh in on what worked and what didn't work. Mm-hmm. And what we found after doing now almost a dozen of these turns is that even though on the first implementation, on the second implementation, we may have seen a small dip in terms of productivity, we are now leaps and bounds ahead of where we were, because we were able to see what works, we were able to see what did not work, or I can't say nothing, I can't say anything purely did not work, or rather didn't work as we expected it to. We were able to make minor changes implemented across the company, and now our conversion rates and our efficiency, as mentioned before, are just exponentially better than what they were even 12 months ago.
That's awesome. So it's easy for a document like this to quickly get out of date, particularly because you're always, adding exceptions and this and that. So you may have a process for onboarding, or just for a process for sending invoices to clients. But then you get, some new client and they don't want the PDF invoice. They want you to submit it to the system. So you want to document that, exception. And some other client wants you to, send it in A4 size PDF and, and have a file name that's less than 25 characters. Those are some real things that I've seen. So you need to document these things as you go. Who do you typically see as responsible? I imagine you have to designate a point of contact or someone who's in charge of making sure that these policies and procedures get updated on an ongoing basis. So how do successful companies manage that?
So I'll address 2 points that you've made. The first being, how do we address exceptions? And the answer is that we don't. We don't because if you allow exceptions to be made, you're ruining your own data set. And if, for example, a client of ours wants an invoice in some way that was not done before, we would look, at the end of the day, I don't necessarily want to lose a client, but to start making exceptions for one person becomes a slippery slope. You make exceptions for every other client, and now your standard operating procedure, to your point, has been edited 17 times over the course of 1 month. You try to analyze the data that you were trying to collect in the first place, and you can't. And then you're left starting all over again by saying, okay, now we're implementing a policies and procedures manual. We are not going to make exceptions to this. And the reality is that that's why I mentioned your business, our business, anyone's business may or may not take an initial, again, I'm hesitant to say hit, because you would be surprised that saying this is our standard procedure, this is my standard legal contract, which legal has reviewed, many clients have signed it. And if a client comes in and tries to negotiate 17 times over on the legal contract, again, do we make exceptions internally? Yes. It really depends on the client, and it does go over to legal. But by and large, 95% of the time, my response is, this is standard operating procedure for our firm. And that's kind of where the conversation ends. Again, I'm hesitant to make such a stark statement here, but it is what we have implemented, and I do see a benefit now looking back over that implementation of processes. Again, whether it's for our own firm internally or for the hundreds of clients that we've worked with in the past. Mm-hmm. In terms of responsibility of actually updating that document. So as you implement this procedure manual and begin that period of time, whatever you predetermined it to be, 1, 2, 6 months, whatever the case may be, you are collecting data points. The easiest data points to collect are what worked by doing the standard operating procedure. What goes into a little bit more of a gray area is what didn't work. So writing down all of these potential exceptions that would otherwise have been needed, or you're going to most likely analyze the data and see that because you did not make certain exceptions, you still ended up closing 60-70% of the business that you otherwise would have made an exception for. So taking a look at business lost, why it was lost, what exceptions were asked for, and what can now be implemented 3, 6, 9 months later to make this process more efficient. You sit down with the C-suite, you have an hour, 3 hour, 6 hour long meeting to really go through the nuts and bolts of the operating procedure as it stands and what recommendations are made to change it, and then you change it. So perhaps it's on a quarterly basis, perhaps it's on a biannual basis, but it's certainly not more frequent than that. Otherwise, you are losing the just the data that comes behind actually implementing those documents.
Okay. So wait a minute. Are you saying, like, let's say a client says, "Hey, we don't do like emailed invoices with us. You have to, register with this invoicing system that we use, like Coupa or Transepta or one of these systems." You would tell them, "Hey, sorry, we just email invoices. That's it. Take it or leave it." Like they're going to say, "Okay, we'll leave it. We don't do that." I mean, we won't pay you that way.
Again, not necessarily.
You'd walk away from that business?
Well, look, everything is relative speaking. So if I'm answering that from my perspective on how we bill, so we have tried to implement as efficient billing process as we can. So from our perspective, we use QuickBooks, we use T-Sheets, we bill every 2 weeks. At the end of the billing period, all of the hours from T-Sheets are imported to QuickBooks, invoices created, sent out to our clients. Mm-hmm. And if a client came to me and said, "Look, we're not going to be paying through QuickBooks. You need to submit all of your hours through this other system," frankly, of course, I would agree to it. I would have one of our admins just pull a report from T-Sheets and enter it in their billing system. Mm-hmm. But from a general operating perspective, nothing would change to any of our consultants, any of the way that they bill or any of the way that they work. The only change really that would happen is on the admin side. We would still be sending an invoice over QuickBooks most likely just to have it generated in our accounting system. But then there would be an extra maybe 20 or 30 minutes worth of work for an admin to go into their billing system and enter those hours.
Yeah, that's my point.
So yes, of course, there's an exception on that, but that exception wouldn't necessarily need to be documented in an operating manual.
Oh, but what happens if that clerk who happens to just know that they have to do that leaves? Like, how is their replacement going to know?
It's noted on the client file.
Oh, okay. So it's noted somewhere. All right, cool. So
of course, yeah.
So what do you typically see at a company that's 20, 50, 100 million in size? Who's typically the executive responsible for making sure that these policies and procedures get updated on an ongoing basis so that they're, constantly current with things as things change?
So unfortunately, a lot of time, especially once you're growing, I wouldn't necessarily say at the $100 million mark. At that point, there are some, at the very least, loose documentation in place, whether it's required by investors or just the C-suite. But in earlier companies, once they're hitting maybe 5 million, maybe 10 million, maybe around $1 million, a lot of times these processes are not actually documented in any formal way. Typically, I would say it's someone in operations, whether it's director of operations, a COO, somewhere up or down the chain there in operations would be the person responsible for that, because ideally that's the person who's responsible for day-to-day operations, for understanding the ins and outs of the business.
Right.
I think that the CEO is ultimately the person responsible for making sure all of these things are done. And certainly any changes to that policies and procedures or operating manual need to be reviewed and approved by, all the necessary stakeholders, the C-suite or whomever. But ultimately, it's operations who need to be on top of that.
Cool. Let's switch gears and talk about the first area you mentioned, the outbound growth. Now, to some degree, this is an area where you have, especially on LinkedIn, you have so many people reaching out saying, "Oh, we'll do lead generation for you." Probably get 5, 10 of those people reaching out to me every day. Yep. And it feels like most of those are kind of scams or people who, aren't going to be able to deliver. Tell me a little bit about your process. I'd like to hear about, you mentioned some subscription sources. I'd love to hear sort of what sorts of those things are. Maybe walk me through a sample engagement of how you have, done this outbound growth piece, and what's involved. What are the steps?
Sure. So we take a very different approach to. I'm hesitant to even call it lead generation in a traditional sense. I get the same notes you do. I've looked into a few of them a few years ago, and frankly, the ones that are not, or rather are above board, are not often delivering what I actually need. So when we brought on a head of growth, we started working with her to understand how to generate proper leads for our own business, and how to set up a system where we can mechanize that process. And ultimately, what we had developed, started offering to clients who have seen an incredible kind of increase in traction from, is that we'll go into a business, again, Will's Widget Factory. We will try to understand the audience, the demographics, the geographic location of that audience, and really who is your best or ideal type of customer. And what we do is we put together basically a sales campaign, or rather an email campaign, that is built into this engine. As you can imagine, it's not. We use a platform called Sales Handy.
I'm sorry, what is that?
It's called Sales Handy.
Sales Handy. Okay.
And this is there are a number of marketing email platforms out there that anyone can set up. Happy to share this information on this podcast as well, where you're building campaigns, you're filling your top of the funnel with leads. You have to write copy for your own campaigns. You have to put together the cadence of which they go out and what you do with responses, without responses. But we're able to set this up in a business where we will generate the leads for you, go out through Sales Navigator, through PitchBook, through Crunchbase Pro, to really go after your target audience. We fill the top of the funnel of this so-called engine that we've built, and then we run the engine. And running that engine entails Will's sales team giving us an idea of their availability. So Monday, Wednesday, Friday, 8 a.m. to 3 p.m. Eastern. And our job is then to take that time block and to fill it with as many qualified leads as we can. So unlike traditional marketing firms, and again, we are in no way, shape, or form just a marketing firm, but unlike those firms that are generating leads and are charging you per lead, we're actually building this system and process for you under your company. Jeffrey at willswidgetfactory.com is the person sending out the emails, and then putting you directly in touch with your target audience. So we don't get involved there. We have sales specialists, and happy to do that for some of our clients. But by and large, what our clients are asking for is, get me in front of buyers of my product, of my service. Here's my availability. Go to town on my calendar. And that's exactly what we do. We book a call with, again, sales team, with Will, with anyone in between that you instruct us to do, and get you on the phone in front of your target audience.
Yeah. Could you unpack a little bit? What I'm really interested in is the practicalities of how do you actually identify those emails that you're going to reach out to, and maybe tell us a little bit about how that works. Do you buy email lists, or do you identify people and then use hunter.io to look up their email address? How do you actually find the people you want to reach out to and the contact info?
Sure. So outside of, again, a number of subscription sources, we are able to just get all of the information we need from what's available, quite frankly. It's not, look, at the end of the day, I think that a lot of what we do involves asking the right questions as opposed to just giving all the answers. And I say that because we're able to, or have been able to thus far, really based on a conversation with that stakeholder, understand what that audience looks like, We're not trying to fill it with, tens of thousands of people just to waste your time on the phone, but rather put your sales team in a position where they're talking on the phone to someone who is at least a more likely buyer than if they were just cold calling. It's a warm intro because you have a Zoom call set up. And ultimately the sale is up to the client or up to the person on the phone.
Mm-hmm.
In terms of getting that contact information, we run it through a number of different scraping sources that at the very least ensure a higher level of quality. I think it's important to kind of take it back and say that we're not in the fact that we're not a traditional marketing company. We're not charging per lead. So I've also gotten those calls where we'll charge $3 a lead, $9 a qualified lead, or $25 a pre-qualified lead. We're simply charging for the time spent involved in actually building that engine for the business and filling that funnel in scheduling all of those appointments. And we're constantly going through feedback loops. So a week or two into the initial campaign outreach, and let's say 20, 30, 40 calls into it, we'll jump on a call with the principals at the company. We'll try to get an understanding of the leads they've spoken to. We'll have them rate every lead live between 1 to 5. And the focus will be to concentrate on the 4 and 5-star leads and to pull away the 1, 2, and 3-star leads.
Mm-hmm. Could you mentioned widgets earlier, but can you give us a real example, sanitize it if you need to, so we can sort of understand what this looks like in practice?
Sure. So one of our clients, I won't name them, but is a 100-year-old insurance agency.
Okay.
They have recently developed a really, really cool product that analyzes an individual household's insurance coverage, whether or not they have any discrepancies, whether or not they have any areas or gaps in insurance coverage. So the idea was to help them with the product, help them build the company, help them put their policies and procedures together along with kind of a few other aspects, and then ultimately help them put together a go-to-market strategy. So part of that go-to-market strategy included building up this sales engine within the business. And when we looked at who are the key stakeholders, who are most likely the buyers after speaking with them, it became very clear that they were looking at centers of influence outside of insurance agents themselves. So building this engine, who are we putting into the top of that funnel, was insurance agents, insurance agencies, and other centers of influence such as estate lawyers or accountants that would either use this product for their clients or recommend the product to their clients. And that proved, and it's continuing to work now, but that proved to be very, very successful almost from the get-go, just because we had such a niche audience to go after. I mean, needless to say, the more specific we can get to an audience, the higher likelihood that the conversion rates will be much higher.
Mm-hmm. So you identified as one of the groups there would be, say, estate lawyers. So I imagine you somehow scrape together, a list of, all the estate lawyers in the United States or in some geography and mm-hmm. found all their email addresses?
Yes.
All right. You mentioned subscription services. I don't know if you feel that those are kind of like the proprietary, the list that you use, or can you share any that you found to be particularly helpful?
It depends what you're looking for. Sometimes a subscription service like PitchBook can be very helpful. Sometimes a subscription service like Crunchbase Pro can be very helpful. It really depends on who is your target audience. I think that the widest availability of information will likely come from LinkedIn. From a live perspective, meaning it's updated almost on a daily basis, if not more often, with people's information. But also you have a little bit more reach and clarity to those people. So having, for example, LinkedIn Sales Navigator, I think it's about $80 a month. If you're using it the right way to target people, can provide a lot more value than it does in terms of cost.
Yeah, no, we I have Sales Navigator myself, and I do recommend that. PitchBook and Crunchbase, for folks that aren't familiar with them, like me, can you tell me what each one of them, sort of what kind of information you can find there, and roughly, how much is a subscription?
So Crunchbase, I think, is about $30 a month.
Oh, okay.
You're looking at a lot of information that is based on company rounds, company funding rounds, M&A transactions, who's behind them, what investors look like in those businesses, what technology certain companies are using. So certainly to IT consultants and technology types of providers, I would highly recommend a Crunch because you have clarity and transparency into the tech stack that a certain business is using. PitchBook is kind of the other extreme in both types of companies as well as cost. So I believe PitchBook is roughly $25,000 a year. Um, stark contrast, clearly. They provide a lot more information on investors and later stage companies. So if you're looking at who invested in the latest or the last Uber round, you can likely get all of those LPs information, contact information, email addresses, all of that. That's typically used a lot more by institutional either funds or brokers. We've been able to use that with some of the companies we work with just to point them in the right direction in terms of who they should be going after in terms of capital raises. Oftentimes we're using these subscription services again to help businesses through growth. So we're not raising capital. On the other hand, we're trying to put them in touch with perhaps strategic partnerships at other companies or people who we think would be ideal buyers for whatever business we're working with.
Fantastic. Any other subscriptions that you found helpful?
Apollo.io has been very, very helpful as well. One of the tools that we use to both scrape emails and to kind of clean them up before putting. That one is also in the high teens in terms of thousands.
Okay, cool. So Apollo.io. All right. Well, Jeffrey, this has been really a fascinating discussion, and congratulations on building a firm, growing from being an independent yourself to growing a firm with 30 folks. That is amazing. For folks that wanted to find you online and learn more about your firm, you want to share any links here?
Sure. Yeah. My email, my first name, Jeffrey, Jeffrey, at Fidelmanco. That is also the domain of our website, Fidelman, ELMANCO.com. We're actually working on a brand new website, which should be coming out in the next week to 10 days. So for whoever who goes on it on or around September 22nd, feel free to come back in about a week or so to see our new redesigned website.
Fantastic. And we will include those links in the show notes. Jeffrey, thanks so much for joining today.
Will, thank you again for having me.